Can your interest rate or fees change once your interest rate is locked? This is Dawn Connors at Mortgage One. The answer is possibly, and let's talk about that. So when you have a rate locked in, you should get a rate lock commitment in which you look at and you sign. So what actually happens is that interest rate is secured for a certain number of days. Typically, a rate lock is good for about 30 days is the typical lock time. We actually go out, secure the rate and it's secured by a mortgage bond. So it's reserved. That interest rate is reserved for you for a certain period of time. So then we come back and we give you a rate lock commitment showing you the rate is locked and when it expires. That rate lock is attached to a particular property though. So number one, you have to have a purchase agreement or a property, either if it's a refinance then it's your own home. If it's a purchase, you have to have that property secured by a purchase agreement and be able to close within the time allotted of that rate lock. If you change properties, if your house falls through, you decide to pursue and proceed with another house, that rate lock is no longer valid because it's tied in with that property. So it's tied into you and the property together. And if you were to leave that house and go look for another home, then that rate lock is no longer valid. Number two, a rate lock can become invalid if you go beyond the lock period. So let's say the lock is good for 30 days. And let's say it's a new construction home and the builder's not done with the project yet. Either that loan has to expire and you relock the loan at current market, or you have to pay for extensions to get that rate lock to closing. And depending on what your loan amount is, that could be as high as $100 to $400 a week to extend that rate lock, especially if markets have moved up. So if it's in the lender's control and they were the ones that caused the delays, then usually the lender will pay for those extensions. If it's due to like an outside source, like the seller's not ready, the builder's not ready, you haven't been timely in returning documents, then there could be extension fees and costs to extend the rate lock, especially if interest rates have gone up. If they've gone down, we can let it expire and then just relock it. So the third reason that interest rates could change is because something materially has changed in your portfolio or in your scenario. Your credit score has gone down. The appraised value has come in lower. Something has changed that makes that pricing of the loan change and thus can change your interest rate and maybe your fees that are associated with it. So it's really important that you read through the 10 commandments that I have and understand what you don't want to do during your loan process. You talk to your loan officer and you make sure that you comply within those guidelines so you don't risk your rate lock expiring, or you don't change things that could impact your interest rate, like your credit score and things like that. This is Dawn Connors at Mortgage One, providing fantastic mortgage solutions. This is such an important video right now because there's a lot of market movement, and it's more like this, I suppose. So it's really important that you get your rate locked, that it's locked for a long enough period of time to get you through your contract, and then that you work really diligently with your client, with your real estate agent, with your lender to close in a timely fashion, so within that rate lock constraint. Thank you for watching. Please like, share, and subscribe to my channel. Thank you.